a sense of capital. Hello, ladies and gents. Welcome back to the second part of my analysis regarding the food delivery and mobility service out of Southeast Asia, Grab. I'm very glad to have you in again. And a quick disclaimer that today that's no financial advice, consultation whatsoever, and there's no guarantee for any correctness of the provided data. So guys, today we will talk about Grab again. We will get even more into the detail. We will talk about the Southeast Asian market itself on a superficial scale, so you get a little bit more feeling about what is going on with the population, etc. Then we will talk about the market share, competition, the fundamentals of the company, peers, valuation, and the big brother and shareholder of Grab, Uber. Okay, so let's jump right into the second part. To give you a better idea about the Southeast Asian market or Asia itself, I think we need to zoom out a little bit and check out the other continents. As you can see here, of course, by far, and everyone knows this, most people on this planet are located in Asia with 4.8 trillion people. That's a bunch of population, I can tell right now. But zooming a little bit deeper, I try to give you a better taste of the market by comparing Southeast Asia with China and the US. I think China and US, especially for the persons who invest in the stock market, have knowledge about it and is a little bit more close to the mind and the ratios. 0.7 trillion are living in Southeast Asia, while almost double the number are living in China, and half of Southeast Asian population are located in the US. What is very special and for me really receives the focus when we talk about the numbers is the population density. That's the huge difference. So while roughly 40 people per square kilometer living in the US, almost 160 people living per square kilometer in Southeast Asian markets. Why this is so important for me, I will come back later to. Talking about the GDP of the world, Southeast Asia is not covering even 5% of the overall pot, but this is something what is not that negatively. On the other hand, the population and as well the GDP is growing very, very strongly. Getting a little bit more detailed into the different markets of Southeast Asia in which Grab is active in. As you can see here, which definitely jumps out on the first glance is the population of Indonesia and Philippines, and especially Indonesia. I mean, the population of Indonesia with roughly 260 million citizens is 41% of all people who are living in the markets of Grab. So that's the reason why I mentioned already in the past Gojek in Indonesia, which is a competitor. That's definitely something which we need to focus on. We will talk later about it as well. I don't want to confuse you here, but keep in mind Indonesia, a big piece of the cake of people who are present in Southeast Asia and in the markets of Grab are located in Indonesia. And what you can see here as well on the first glance is that Singapore comparatively and as well Malaysia have really a low population, especially compared to Indonesia, of course. And the third aspect I want to point out is no matter if we compare the growth from 2018 to 2023 or the expected growth from last year in the next 5 years to 2028, it stays on a quite solid high level of population growth of 5 or 4%. So here there's a lot of potential left, while other countries like Germany, the population decreases more or less or is stable. In these markets, more and more people getting born, and therefore potential users of the super app and services of Grab will be present in the future. In general, let's state again the countries: Cambodia, Indonesia, Malaysia, Myanmar, Philippines, Singapore, Thailand, Vietnam. It already sounds like crowded countries. I mean, even if people I think from Europe, I don't want to talk for other people, but I think when you think about it, people would think, of course, more people living on 1 square meter. That is what I expected. And actually, it's the case. The number is even larger than expected, honestly. And what I want to point out here is Singapore. Okay, it's a very high number. Why that's the case? We're talking basically about a city country. So the whole country is basically one city. And of course, the density in this case is very high. I guess the density of Moscow, of New York, of Paris, or whatever is as well very high. But why I set this focus on population density is the case because of the potential for batching and stacking orders. Just think about the food delivery business and about the infrastructural density of different merchants. and the density of people who live there. So there's so much potential when someone set up an order that on the same time another person is setting up an order for food, for shipment, package, whatever, and therefore network and synergy effect starting to create, making sure that one driver, one rider can just fetch up different orders, and on one route they're driving, they can cover it. So there are definitely some efficiencies going on, and for me, it's not for every business that important. When we talk about cybersecurity, whatever, I think population density is not the most crucial number. But when we talk about food delivery and mobility services, I think, in my opinion, this is a number, this is an aspect which you should not put in the back. It's something which you should highlight and which you should think about when you're, for instance, located in the US and 40 people live there on a square meter, how delivery is going on. Most of the deliveries are not batched and stacked, so one delivery per order, and when the driver starts to drive, he just goes to the customer and drops the delivery and goes back to another restaurant, merchant, whatsoever. In this case, in Southeast Asia and in the core business of Grab, there are so many synergies that very likely a driver can deliver groceries, food and other stuff very efficient because of the stacking and batching potential, which again results out of the very high population density. Coming finally to the GDP of the markets Grab is active in, and as you can see on the first glance, Indonesia is again taking the lead by far with 1 trillion euros GDP. Other countries are more or less on the same scale, 300, 400, 500 billion euros, which is great because basically that provides a certain level of risk diversification to Grab, and even if one of those markets is not performing that well, the others very likely will cover it. On the other hand, which is extremely crazy, is that especially Singapore and Malaysia are achieving that high level of GDP while having a very low number of citizens located over there, as you can see in the top right table. That's crazy in my perspective. So Singapore, not without any reason, is a lot of times claimed as the big brother of the other Southeast Asian countries and is stated as the Silicon Valley of Southeast Asia. You can see that together they have just a population of 14%, but on the other hand the GDP level is so high. And why that's the case, let's check out together the average salary level in the countries, and you can see here again very quickly that Singapore is by far in the front. Indonesia always in the front when we talk about overall GDP and population, but the GDP per person, the average salary is not that high, especially compared to Singapore. You can see here roughly 5,000 US dollars per month. Then there is a lot of distance, and then comes Malaysia, and then again distance, and then Thailand and some other countries. So compared, for instance, to Europe, Singapore and Malaysia is a little bit like the Switzerland of Southeast Asia. You can smell where the money is getting made, where the Silicon Valley power is present, and where the potential is existing. And you will see later on, it's great that Grab is that strongly present in both markets, Singapore and Malaysia, with high density when we talk about population, and on the other hand, population which is financially powerful. So to fetch it up in terms of a business which is really existing in the presence, where people delivering goods from A to B, population density and GDP of course are big drivers. And it's just great to figure out on the first glance that the population density is on a very high scale, which in my opinion could be an indicator that even if Uber or Delivery Hero or Just Eat Takeaway, DoorDash, Deliveroo, whoever are not that profitable and successful in other markets, Grab could be the chosen one when we talk about food delivery and mobility services, because just on this one crucial aspect, population density and the network effects which result out of it. Before we jump into the market share and competitive situation of Grab, I need to state again that the information will be all about the food delivery business. As stated earlier, it's a little bit awkward that mobility services are not that often covered in the media. I'm not sure what is the background of this, and so for me it was as well difficult to find any information about the mobility services. It is by far the second strongest pillar of the services which get provided by Grab, And for instance, I read something like there was a survey in Thailand that 80% of the participants quoted that they use on a regular basis Grab mobility services. Who knows how valid this information is and how reliable it is, but that's simply the case. On the other hand, I honestly was never in the Southeast Asian countries present. I can imagine that Singapore, for instance, is very different to Indonesia, and which is again very different to Philippines. So just because everything is located next to each other in one continent, very likely culture, habits, whatsoever, economical ideas are very different. That is what you need to keep in mind. I was just present for roughly 3 months in the past in India, and my experience over there was that food and grocery vendors have been on average quite smaller, each store just on its own, but the number of those have been very, very high. And so I think if India is similar to the Southeast Asian countries, there's way more potential for Grab and this kind of businesses they provide in the food delivery services compared to other players in other continents, because just of this high density of people, what I already talked about before, but as well on the high density of different food and grocery vendors. But what we should not forget in this connection is it has as well, of course, a downside, and this in my opinion is that a lot of residents who are present there and living in Southeast Asia very likely have options in front of their door. They just need to cross the street and very likely there will be some food merchants existing and some supply. At least that's my idea, and at least that was my experience in the regions I was present at in India. So I'm almost very proud because I found this kind of illustration, and what I like about it, it shows you very clearly the core markets of Grab, which are basically 6. So you can leave out Myanmar and Cambodia because they are comparatively small. And what you need to keep in mind, they not cover the whole nation, and you can order in each village food and utilize the services of Grab. No, they are focused on overall 600 cities. What is very nice is they are quite highly diversified when we talk about different markets. In no market they're creating more revenue than 35%, and on average they have a market share in each market in terms of food delivery of 54%. So they are in all the markets in the lead. Again, what is quite surprising is when you add Singapore's and Malaysians food delivery GMV potential, gross merchandise value, which is the key number in this business, we're talking about $4.7 billion US. And even though the population is so small compared to Indonesia, this GMV potential is larger than Indonesia. With 60% in Malaysia and 60% in Singapore, they are in a strong position in those markets, and again with citizens which have strong buying power. And even the actual GMV which gets generated by Grab in those 3 markets displays the same development. So in Malaysia and Singapore they have a GMV of 2.8 billion compared to 2.2 billion in Indonesia. It's very small markets but very impactful ones. Of course there's a certain potential existing in Indonesia and in the growing population and the overall adoption of industrial development. However, so far Singapore and Malaysia are really bringing money into the game. And comparing those numbers, which are based on 2022, to the numbers of 2021, you can recognize very quickly, and I'm just asking you to post the image here so you can check out by yourself the different numbers in the regions. I don't want to talk about them too detailedly right now, but you can see that the market share on the different markets is increasing and the GMV is in line with that. So the company is truly, prepare yourself for a joke, grabbing more market share into their pocket. Why Grab is increasing their market share? You can see they are extremely efficient when working with their money. As you can see, the food delivery business is way more efficient compared to their competitors. And this is basically driven by their investments in incentives. Just for information, the business is affected very highly by incentives. So bonuses which merchants, which clients and which drivers receive while they're utilizing the services of Grab. And the chart shows you very clearly that on average Grab doesn't need to provide and grant that high number of incentives to their stakeholders compared to other companies. So Grab has a huge stake of the market, and on the other hand, they work way more efficient, and therefore the potential of getting profitable on a high scale in the future is, from my perspective, definitely a present and a realistic one. So from my perspective, Singapore, Malaysia, the most impactful markets for Grab at the moment, are heading into the right direction. But what is about Indonesia? So Indonesia is a different story, and in my opinion, that is something what needs to get observed very closely when you think about putting the stock on your watch list or investing into Grab, because the competition there is very high. As you can see here, Grab doesn't have more than 50% market share, or can catch the average of 54% of all the markets they have. That's not existing in Indonesia. And still, Indonesia has so much potential, which is something we need to definitely keep an eye on. Why is this the case? So you need to know that Anthony Tan, the co-founder of Grab, had a classmate at Harvard Business School, and this classmate as well decided to establish a company, and this company is called Gojek. And Gojek is an Indonesian company, and is a company which is nowadays 100% focused on Indonesia. It's very similar. The ultimate target of Gojek is to create this kind of super app which wants to get created as well by Grab. And Gojek melted together with Tokopedia, which is an e-commerce store like Shopee. So Shopee and Tokopedia are competitors in Indonesia. Sorry guys, it's getting a little bit complicated. However, just keep in mind, Gojek is the direct competitor of Grab, founded by a classmate of Anthony Tan, who's the co-founder of Grab. So they share a certain part, and now they are direct competitors, and actually they're not talking so good about each other's companies. So Gojek a lot of times talk Grab is just copying their services. And if you visit their website, you can see very quickly that actually that's the case, not because of the design, but about the services. You have here your food, you have your mobility services, you have your payments, and you have additional businesses. It's very close to each other. And as you can see here, the ride-hailing market share, so actually the numbers of the mobility services, are head-to-head over the past months from 2022 to 2023. So this market is very impactful, very essential, and is something what I want to see, that Grab taking more and more market share, and maybe they can achieve that by increasing the already stated incentives, these bonuses, to give more money the drivers and more money the clients and more money the merchants, to appeal them to use Grab instead of Gojek. And how they can manage this? Maybe the path to this positioning is that they use the money they're earning in Singapore and Malaysia and the other markets and transfer it into the Indonesian market to really steal some market share over there. To close this topic, and I think I give you already a lot of information to the different aspects which needs to get considered, I just want to state you some development which happened in the past. So 2022, HelloFresh, which is actually a quite famous German grocery delivery service, quitted activities in Malaysia. In the first half of 2023, Zomato, which is an Indian food delivery, shuts down their businesses in Philippines and Malaysia. In the first half of 2023, Gobble, which is a USA located grocery delivery service, quitted the Asian activities. And last but not least, in the first half of 2023, AirAsia, which I already showed you the super app before, and they provided as well food delivery subsidiaries in the Southeast Asian market, forwarded their business to Foodpanda, which is a local food delivery player, and you have seen in the map a minute ago. So overall, the business, the food delivery business especially, is very competitive. I think it's located in DNA of this business. I think all of the stakeholders, no matter if we talk about the clients, the drivers, the merchants, are quite price sensitive. And if the case happens, they are not very loyal. So if someone provides better financial conditions, they will switch and swap to the other vendors. Especially that is very present when we talk about the drivers, which regularly are registered at two apps, for instance Foodpanda and Grab, at the same time. And as soon as the deals are better for them, the incentive conditions are better for them. They maybe drive on the one day for Grab and on the other day for Foodpanda. That is when I'm talking about price sensitivity. I in generally think that Grab will not expand to new markets in the near future. Maybe by acquisition, but not on an organic way. Coming to the fundamentals based on the latest earnings results Q3 2023 of Grab. So what you can see here in the table on the first lane is GMV, which stands for gross merchandise value. That's basically the key number. It's, in my opinion, more relevant than the revenue actually. And GMV includes the total transactions through products and services executed on the Grab Super app. And as you can see, Q3 2022-2023, it's almost jammed. It's not moving so much, just in year-on-year change of 5%, which is, my opinion, definitely disappointing if you think about that. GMV is really the indicator of the total development of the business. Then we have here stated the MTU. MTU stands for monthly transaction users. So the total number at least is going up by 7%. Not that great, but at least it's a plus. But going one lane down, GMV per MTU again, and this is dropping. It's dropping from $151 to $148 from year to year. So that's something really negative in my perspective. So GMV doesn't look great, MTU okay, and GMV per MTU definitely not feeling so great. This is what I don't want to see. Heading a little bit deeper in the different service divisions, as you can see here, the results in terms of the deliveries. So basically the food, the grocery, the mart and the package deliveries. The revenue here is taking great advantages, increasing on a high scale, but again, the GMV not that great, 7% year on year. Not impressive at all in my opinion, to be honest. But what again looks great is the overall development of the segment adjusted EBITDA. As you can see here, looks quite comfortable. The development is really accelerating and creating momentum in my opinion. And this is more or less what you can see as well in the mobility division. Here the revenue is growing way less, but on the other hand, if you take a focus on the GMV, that's the key number as I mentioned from my perspective, and this is growing with 30% year on year. Why that's the case? So basically the tourism is celebrating a comeback to the after pandemic effects, and here as well the segment adjusted EBITDA is taking good advantage out of it. Not on the same scale like the deliveries, but still quite impressive. Furthermore, we have the big hope, the big rising star, financial services. Here revenue is growing quite strongly. Total payment volume, I don't understand honestly why it didn't change more or less. And the EBITDA again is heading into the right direction. And coming to the last service division, which is enterprise and new initiatives. This is covering the ads business, what I very much like, because it's a clean revenue equals profit business more or less. And the revenue is growing very, very strongly, even if the base is very small with 15 and 28 million US dollars. It is growing, and as I mentioned, very rapidly. The GMV again on a solid number, on a solid base, but I think in this case it's not that important. Revenue is definitely more the crucial aspect here. And then we have the EBITDA, and again, as you can see here, a very clean, profitable business. So as soon as they decide to offer their ads, they know already, okay, if someone is approaching to it, this is going more or less straight into their wallet and into their cash balance. Coming back and setting a separate focus on the segment adjusted EBITDA, I want to make clear that based on the GMV, 3.4% in the delivery section, it doesn't look too great as a margin ratio, but EBITDA based on revenue, it looks way better with roughly 28%. So already in Q3 2022, they reached adjusted break even. And going on with the others here again, 12.8%, not looking too great. The reality is 78% adjusted EBITDA margin based on the revenue. I think that's then again the more honest number. And then we have financial services. This is actually minus 36% based on revenue, so it looks even worse. And then we have the ads business, and here we're talking again about a very high adjusted EBITDA margin of 75%. So that's great. And to add something, last but not least, compared to the GMV, the revenue means that this is actually the total revenue what they create based on the services which they charge through the merchants and through the clients. And this overall quite positive adjusted EBITDA margins based on the revenue you can see here as well are reflected in the overall group adjusted EBITDA. So this quarter, Q3 2023, first time in history they achieved a positive adjusted EBITDA. Of course it's adjusted, and later on I will show you how they are designing it by their own, but it's still quite impressive and a good sign how everything is going well, even growing better than expectations. And why this is the case I want to show you here. So here we have the Q4 2022 results, and as you can see, till Q4 they reached this break-even point in first half 2024, and in this Q4 2022 they stated, okay, we will adjust it, we will reach it earlier already in Q4 2023, and now they again reached it even 1 quarter earlier. So in a quite short period of 1 or 2 years they adjusted 2 times the target. There are only 2 options. The first one is they sandbagged originally and really put the target very, very low, or the other option is that they really crossed it and somehow creating great progress. And I can imagine that not everyone from outside, from the investor side, is really recognizing that this kind of progress and speeding up the overall business development is taking place. So I think that's definitely a great chance over here. Next to GMV, a very business specific number is incentives. So the bonuses which get granted to the drivers, to the merchants, and as well to the clients to attract them and defer the Grab business and their offers to the offers of the competitors like Gojek and Foodpanda. And as you can see here, it's a crazy high number. So it's still 7.1% in the past quarter based on GMV, not based on revenue. Think about this, crazy high. But however, if you compare it to 1 year ago, it decreased very, very heavily from 9.4%, or as you can see here in the absolute numbers, roughly $480 million per quarter to $380 million. Here they saved almost $100 million just in 1 quarter based on the incentives which they decreased. What I very much like about this number is not just that it's getting lower and lower quarter by quarter. It's way more important to understand that the GMV is even still slightly growing. On the other hand, the number of users, MTU, is increasing while they're decreasing the incentives. And it's a very competitive business. Many people say, guys, without providing these incentives, these bonuses to the different stakeholders, it's not working out. But they prove at the moment, in my opinion, and that is a very important aspect to understand, that it is actually working out. Decreasing the incentives while GMV is growing, even though it's not that high, but it is growing, and MTU is solid. And this is what you can see as well when we take a closer look how the actual loss was transferred magically to adjusted EBITDA first profit achieved break-even point. What you can see here as well is another very strong profit driver, and this is actually the stock-based compensation, or how they call it here, share-based compensation expenses, which is still on a very high scale. Even compared to the year before, it's decreasing very heavily with 26%, but if you take a closer look, it's actually still 50 till 70% depending on the quarter or on the 9-month period, affecting negatively the overall loss. So as soon as they would just focus on the existing cash and they would stop providing the strong stock-based compensation, they very quickly have the chance to achieve a clear profit base. So again, yes, of course, they just reached the adjusted EBITDA break even. In my opinion, it's not a true positive sign because it's adjusted, but if you take a look behind the curtains, you can see here that the incentives and that the share-based compensation taking a major part between the difference of the loss to the adjusted EBITDA, and there is a clear path as soon and as longer they're decreasing the expenditures into these both sections, and actually in the meantime they're generating a serious income through their net interests based on their very strong cash position of approximately 5.2 billion US dollars. The last aspect I want to point out is actually it's not just about financial engineering when we talk about the results. What I stated in the latest earnings results, the effect, what I already stated when we talk about the overall population density, which is presented in the Southeast Asian market, you can see here as well, is reflected in their results. So they actually improved their batch rates by 34%, and the management stated in the earnings call that 1 of 3 deliveries are stacked orders. So in my opinion, that's really a high ratio, and I can't imagine that's the same case in the most cities in the Western world like the US or Canada or even Europe. So that's definitely something impressive. And what is even more great, for me it's very important that this triangle between 3 stakeholders, so the clients or the users, then the drivers and the merchants, all of them are somehow benefiting out of it. As you can see here, the users, they're paying a lower fee, the drivers, they're making more salary per hour, and on the other hand, the waiting time at the merchants getting decreased. So this triangle is covered, and again, everything is working in a very positive direction. And at this point in time, I definitely don't want to miss the chance to give a shout out to my man G-Man from Grab Adventures. I watched a bunch of videos which he recorded when he was driving through his shifts for Grab in Singapore. It gives you a very good impression how the business actually works and how good the batching and the stacking works. Of course, not every shift is that great and the salary is that high, but it proves the business in general is working. And you can see there, it's not just about the regular groceries or dishes. They deliver goods like chat letter, like beauty products and ice cream. Again, G-Man, thank you very much for giving me the insights which I needed when really trying to jump into the position of a driver and getting a feeling of their daily working routine. So the last chapter of today is peers, valuation and Uber. And I can already tell you now that this is just based on my expectations and my calculations, and I'm very confident that your calculations and the results will look very different to mine. So please take it with a certain level of distance and make your own evaluation. As you can see here, my calculation, I keep it very simply, is basically just focusing the year-on-year sales growth 2023 expected to 2024 expected. Then we have the EV, the enterprise value to sales, again 2023 expected to 2024 expected. Then we have the price earnings ratio, again 2023 to 2024 expected. And then at last but not least, we have the fair price multiplicator, which for me is the major indicator if the price is too high, too low, and it gives me a rough feeling in how strong the over or undervaluation is present. So if you can see here 3x, for instance, 3x doesn't mean okay, the price is right now $10 US, it should be exactly $30 US. That's the fair value. That's not the case. It's sometimes higher, sometimes lower, but it shows you that for me, a 3x fair price is definitely more positive than a 2x fair price. Okay guys, let's jump right into it and taking a look at Grab. Honestly, the results are not that great. I expect a year-on-year sales growth from 2023 to 2024 of roughly 32%. That's just my own expectations and calculations. And therefore, talking about the EV to sales ratio of 2.9, again, not that great. I mean, still not a bargain for sure. Then we have the price earnings ratio, again, definitely not that great. I think it's currently at something like -20, and I expect 2023, 2024, a mix out of it, it will be roughly -40, but still definitely strongly in the red, even if they present way better results than expected at the moment, but definitely not a good catch. And then of course the overall fair price is not looking great too much as well with 1.4x. I think there's definitely some upside potential. Maybe it's 10, maybe it's 50%, but in the end it's not that impressively. So just the fundamentals, just a rough number based on my calculation. Grab is for me not a strong target, but again, for me it's definitely a story play. I like the story behind, I like the overall developments, I like the aspects which you can't catch that heavily, the batching, the markets, all these aspects creating a very good story in my opinion, and the overall numbers are not that bad, so I think it could work out very positively. Going to their direct peers, but let's say direct just in terms of the food delivery business, which is again one of their two primary services they provide next to mobility services. And here we have Deliveroo, Delivery Hero, DoorDash, and Just Eat Takeaway. And I don't want to talk bad about any stocks I'm not owning or evaluating and researching too heavily, but just on the first glance, as you can see here, Just Eat Takeaway is at the bottom, and I would not even invest any time to do research, because before I start researching a company, I do this superficial calculation based on this three major fundamental pillars: year-on-year sales growth, EV sales, and price earnings. And just already at this point in time, Just Eat Takeaway and as well DoorDash would get eliminated immediately. Coming to the other, both Delivery Hero, actually not that interesting for me. It's not that strong and not that bad. What is great here is definitely the EV sales ratio. Just compare the 0.9 to Grab, so that's definitely a big advantage in terms of Delivery Hero, but everything else is not attracting for me too much. I mean, I'm at the end a growth investor, no matter if you talk about growth on profit base or on revenue base, but 11% is not a strong growth rate in my perspective. But Deliveroo, honestly, if I just would like to invest into a pure food delivery player, Deliveroo by a far gap would be my choice, would be my stock I would invest the money. Not only because of this resulting 3.3x fair price multiplicator factor, but you can see it here very simple. The year-on-year growth is okay. The EV sales is even lower than Delivery Hero. And then we have a price earnings which is actually positive. Yeah, so they are already on a, in my opinion, further stage, reaching the profit side and the profit which is actually lucrative. Then we come to other peers. Here I start with Lyft, which is basically very similar to Grab, and here actually not rated that bad. Again, better fundamentals if you compare it one-to-one with Grab. I need to be honest here. Coming to Uber, and Uber, as I mentioned, is holding shares of Grab, was direct competitor, is now a little bit the big brother, is very similar to all the services, in my opinion. The best comparable stock out there next to Grab. And here you can see basically no matter which aspect we focus on, beside the PE ratio, they are definitely ahead, and then Grab is not looking anymore that bad. Then we have C Limited, already talked about it in the first part of the analysis, and here again, C Limited has a better fair price multiplicator, but what I really don't like is the original growth story and growth strategy of C Limited, which is not existing anymore that heavily, and 13% growth for growth story is not compelling in my opinion. And as soon as I check out this number, for me this chapter is basically closed. And then I've added PayPal. Why? Because actually PayPal is just a very present, very popular stock. A lot of people know about the numbers and have a good feeling for it. A lot of people in the Western world at least using this on a daily basis. It's very present. And on the other hand, all the other competitors besides C Limited are focusing just the key services, food delivery and mobility. But PayPal is presenting this financial side, which again is growing on a strong base here at Grab. And as you can see, even though others are rating PayPal as a bargain, my calculation is not doing this. And my calculation at least is neutral based on the information I'm entering. The year-on-year sales growth is not that great. The EV sales is not that great and impressive. Only the price earnings ratio is very, very good in my opinion, but this doesn't change anything when we talk about the overall fair price multiplicator, which is below 1 and definitely not a positive one. So I would not touch the stock actually, even if I think the story and the overall potential is very interesting. To sum it up, Grab is not a steal, it's not a bargain, it's not dirt cheap, that's not the case, but it's on a solid base, it's not that negative. I mean, PE is definitely something what we need to keep an eye on, but I showed you the different tables of the earnings results, and I think they're heading into the right direction in terms of this PE, which is actually looking bad at the moment. And next to it, you're not purchasing just these fundamentals, you're purchasing as well the story, the market, the overall potential, the management. And this is, I think, a blend which is really attractive. Let me finish this part of the analysis for you by comparing a little bit more the numbers of Uber and Grab. And as you can see, the gross merchandise value again grew from the delivery perspective by 7% year on year. At Uber, it's double the amount with roughly 18%, so way better. Coming to mobility, here it's actually on the same scale, 30% here, 30% Uber. So I guess the revenue increase is resulting out of merchant acquisition processes of new markets and as well of rolling out the Uber Eats in new markets like in Germany. In the past it was not very present and Lieferando was really here the major player, and now a lot of promotion is going on for Uber Eats. And on the other hand, when we take a look on the segment adjusted EBITDA, here we have at the delivery side 3.4% based on GMV. At Uber we have 2.8%, so 20% less. That's definitely a difference, but it's getting way stronger when we talk about the adjusted EBITDA on the mobility division. Here at Grab we have 12.8%, and on Uber we have 7.2%, which is actually 40% less efficient. So the end of the story, in my opinion, is that Grab is honestly somehow limited when we talk about their key services, deliveries and mobility because of the regions they are active in, and Uber is way more open to basically the whole world to enter the markets and rolling out their Uber Eats services next to the Uber mobility services. On the other hand, both Grab key drivers, deliveries and mobility are very likely more profitable and becoming even more profitable in the future compared to Uber. So guys, that's it for today. Thank you very much for watching the video. I hope I could add some information, some knowledge to you when we talk about Southeast Asia, about the business itself, and of course about the stock and the company behind it, Grab Holding. I hope you liked the video. If that's the case, please don't forget to give me a thumb up and subscribe. And of course, if you like to exchange some information, to set up a comment at the video section. Next time we will finalize the analysis with the last part, and we will start with the key stakeholder driver, which is for me a major driver for the business and very important aspect. Then some extraordinary potential which is existing and which you should not miss out. This is something what I think is really crispy. Then I will provide you, of course, my very own verdict, and last but not least I will tell you some critical success factors which I would keep a very focused eye on as soon as I would put it in my watch list or as soon as I would start to invest into this company. Guys, and before I forget it, I'm now very interested if you ever have been to Southeast Asia, if you maybe already utilized the Grab services, no matter if it was the delivery services or the mobility services, and actually what was your personal experience with it? Did you like it or not? Please leave me the comment below. Thank you very much. See you next time. A sense of capital.